Hey everybody, Marty Bazaar, good morning. 26th of January 2019. Gonna just update the chart we've been following here for you, and I'll do it fairly quickly, I think, this morning. We started watching this S&P 500 daily chart right in here, and I was warning you that 2600 was likely to be some resistance, and that a lot of folks are expecting that, as we normally do during deep corrections like this, that will come down and this will be a W as opposed to a letter V look as we bottom out of it. Well, we tested that 2600, resisted it for about 5 days, and then blew through it. I said in here, if we blow through it, I think it'll be probably on good trade news, the trade quote war with China. That's exactly what it was, and we did blow through there and didn't even come back yet and retest that 2600. We've come close, but we haven't. Then actually went through the 50-day moving average and have held above there and held above this very key potential resistance at 2630. And so for about 5 days we've been kind of consolidating up in here. This last Friday or a week ago yesterday, this was that news that China said they're going to try to eliminate the trade imbalance. I wrote a few days later that that's probably not something that we should be wanting, frankly. And if you missed that, it was titled Careful What You Wish For. And then we've come down, tested that 2630 successfully. Perhaps news that the government was going to reopen, which it did now for 3 weeks, inspired that nice rally that we had yesterday. But this looks constructive. I said last week that this slope here was unsustainable. Something like this is more sustainable. Some technicians will actually sit and draw 45-degree angles and expect the market to come down. If you look at long-term charts, that's kind of the angle of bull markets over the long run. So if this is going to ultimately settle into this kind of an uptrend, we can see consolidations and rises and so on and so forth. This would be a level to test on the way down at any time. And we could get there. Again, history suggests that almost always steep corrections like these have a double bottom, not a single bottom. But you know, these headwinds that I think created this, some of those are beginning to abate, and if they could continue to abate and general conditions stay as decent as they are, who knows, maybe we don't come all the way back and test this in the next few weeks or months, and then we move through this and on to new highs, and we create support levels further up. That remains to be seen. All I'm saying here is I want you to continue to anticipate that we may very well see a test of this, and people will kind of freak out because that's quite the percentage decline from here. Barring any new fundamental developments, if everything is as it is, that would be probably one of the greater buying opportunities we've seen in a long, long time. But today, basically, I just wanted to come in and tell you that this is looking constructive. It would make sense that we consolidate here. We consolidated for about 5 days here. We've done it here so far. Next week will be telling with the resumption of the trade talks and lots of earnings announcements coming out next week. There's going to be lots of reason for the market to move in one direction or the other. Here we have this downtrend that was created here between September and December 3rd. Breaking through that would be bullish. There could be some resistance. Then that 2700, very key, looks a lot like 2630 did. We continue to move. 2800, where we had this triple top, as a technician would say, is bound to be something the market bumps its head against. It's going to take more good news, mostly on the trade situation with China, I think, folks, to get us up here testing the all-time high. If we're going to move beyond that, we're going to have to put that to bed. Hope you have a wonderful weekend, and I'll talk to you again very soon. Take care. Bye-bye.